Hey everyone, welcome to Canadian Mortgage Weekly for June 1st, 2022. And we're really excited today because today is the Bank of Canada interest rate announcement. Sam Thompson and I are here to cover it live. And you know what? It's going to be a great morning. We have a lot of exciting articles to go over, exciting lead up news. Sam, are you pretty pumped about this or what?
I'm definitely excited. Yeah, I love these pre-rate shows because they carry a lot of buzz, and especially in conversations we've been having and our normal Canadian Mortgage Weekly episodes, we track the bond yield, we track the CDOR. So it's good to have these announcements and get to see concrete, what's actually going to happen with this variable rate. So I'm really excited to go through today's episode with you. Yeah.
Yeah, so we're going to be going over some really important items just before we get into that announcement that's coming up in just a few minutes. I know everyone's really pumped about what's going to be happening with the interest rate in Canada right now. I know there's been a lot of talk. So Sam and I are going to go over some of these news and tidbits of information that have been leading up to today's rate decision. I know the Bank of Canada has a lot on its plate today, and it's a big decision. So one of the things that we like to go over here on Canadian Mortgage Weekly on our special episodes that we do for the Bank of Canada rate announcements and doing these pre-rate shows is the news that has been leading up to today. And there has been no shortage of news that has been talking about what they say a locked-in rate hike.
That's right. I don't think I've seen any that are, playing the optimist and thinking maybe we'll have, it'll just stay the same or even just a quarter point increase. It looks like basically every article, every economist that I've seen commentating on this has, bought in with the idea of a 50 basis point hike today.
Yeah, they have. I know we've also been seeing a lot of articles talking about how there's a lot of inflation out there. We'll get to that in a second, but a lot of these interest rate hikes have to do with pointing to helping that. And there's even been some articles that have been released. I know we were talking about this morning, Sam, but a triple rate hike this morning. Now,
right.
it's hard to say that will actually happen. That might be just sensational, just to get some viewership. I mean, there's a lot of articles talking about already a double rate hike.
Right.
A triple one would be quite a difference, and from the other tune we've been seeing from those other articles.
Yeah, I mean, I think that would be a large shock to, both us Canadian consumers, economists, if we did see the Bank of Canada with a triple rate hike. But, stay tuned for 10. We might end up seeing one. Who knows, right?
Yeah, exactly. Well, let's talk about the bond yield and what that's been up to. I know we track that on Canadian Mortgage Weekly on our regularly Thursday episodes there on at 11:30, and we use that to track where the fixed rates are headed in Canada. Now we have been seeing a little bit of a tightening in the bond yield. Sam, what's been happening with it as of late?
As of late, we have seen a bit of an increase. I know that we were tracking for a few weeks a gradual downward trend. And I know we had commented last Thursday on our episode. We did see it look like it had the potential to either continue dropping, or it did look like it could, kind of peak back up again. And that is what we have seen. It jumped up back to about 2.75. I think starting out the week, over the weekend, it was at about 2.61. So we have seen it increase a little bit, but again, it'll be something to track to see if it's just entering a tightening cycle, and it'll, flow as it does within that range.
Exactly. Good points there, Sam. And we'll continue to look at that bond deal tomorrow on Canadian Mortgage Weekly on a regularly scheduled program. So keep in touch with us there. We'll also have commentary on today's rate announcement as well. So also, a third point we like to go over is the CDOR rate. I know we'll just touch on this today. We'll go over it a little bit more detail tomorrow. However, the CDOR rate, which is a good indication of what is available on the variance from prime. Tell us a little bit about that, Sam.
Yeah, so we track the CDOR rate based on its variance from what the prime rate is. And we have been tracking for the last while, actually, a pretty steady increase in the CDOR rate. But as long as the variance is under 2%, then it is actually an indication that the variable rate is still a good and competitive option. So looking at the CDOR rate, again, it has increased since we last had commented on it, but the variance still indicates that it is a good option. So we'll see how this changes moving forward, because again, if we do see a rate hike, that will influence what the prime rate is, which will actually, give us a bit of different data to cover for tomorrow's CDOR rate, depending on what we see today on the Bank of Canada rate announcement.
Perfect. That's great, Sam. Thanks for that. I know that with a lot of the articles, we did mention them about in the news section of our show today on our pre-rate show, that a lot of articles have been saying, that we are preparing for a 50 basis point rate hike in today's announcement. There really hasn't been very many that are talking about a single rate hike, quarter basis point. I was hoping to see some articles in the other direction saying that maybe there'll be a rate decrease. I think there was a growing sentiment that this rate increase is happening. I think, Sam, the percentage is pretty high. We'll get to that a little bit later this morning. But yeah, the growing sentiment, as we talked about in the first part of the show, there's a agreement that there's a 50 basis point rate hike for today. Mm-hmm. So we'll see what that happens very shortly here. Now, clients as well. I think clients have also realized and accepted that there is going to be a rate hike as well today. Mm-hmm. It seems like a lot of the variable rate clients that we are speaking to, Sam, they understand that there is a rate hike coming. They have budgeted for the rate hike, and they've already accepted that, even though they are in a variable rate, that they're in a safe spot, because they know that if they were to take a fixed rate today, it's still a much higher rate. They're still saving if they take a variable rate today. So that's a good spot to be in. However, the clients are agreeing that they believe that there is also a rate hike. Wouldn't you agree?
Yeah, absolutely. I think the spot that we're at as mortgage professionals is managing both expectations and trying to decide the best option. Because again, if you've been tracking our last our Canadian Mortgage Weekly videos, or you've been tracking what the fixed rate's doing, it's been increasing, which has we initially saw that as a shift for people to go with a variable rate, and it looks like if we're looking at today's fixed rates as, starting to shorten or almost reaching a bit of a peak, because we haven't seen them increase too much recently from, the quite speedy increase we saw over the last number of weeks. It could be also an interesting, conversational decision to get into a fixed rate when it is kind of at this peak amount. So like you're saying, we have seen clients that, even though they understand there is a rate hike coming, they are still choosing a variable rate, given that they don't want to get into a fixed if we are looking at sort of a peak fixed rate.
Mm-hmm. Interesting you mentioned the peak fixed rate option there, and that is a good conversation to have. Perhaps if anyone is interested in this specific section of our show today, that they could reach out to us and schedule an appointment to talk about peak fixed rate and also how it affects your mortgage specifically, because I think that would also be something that could be fine-tuned to each specific individual.
For sure.
But yeah, let's talk about the next section here. I know we talked about the last time there was a rate increase. That was April 13th, 2022.
Not too
long ago. Yeah. We also have had, a lot of clients react to that rate increase, thinking that that was an acceptable rate increase, because we're also seeing a lot of websites and we're reporting that inflation is reaching highs. I know that you've mentioned, Sam, it's reaching a 31-year high of 6.8%. So that's quite a large figure. And I think that a lot of Canadians are expecting the government to step in and try to handle this for us.
Yeah, I think that that's been one of the major, pushing factors for, having an understanding and an expectation that the Bank of Canada will, continue its current pace with the, rate increases. From that first one, I think the first double rate hike was probably still enough of a shock for some individuals,
Yeah.
but I think now that we're seeing that inflation creeping up higher and higher, I think everyone's expecting and understanding Bank of Canada's sentiment to keep increasing the rate.
Yeah, for sure. So let's look at this here. We are looking at the next meeting, which is going to be in July, and there is a sentiment also that there could be another rate hike in July. I think that this may change though following today's meeting. This is always something that's very unpredictable because today's results can very much skew the next meeting. But let's talk about the chance of rain today, Sam. And the chance of rain, meaning the chance of the rate hike today. I know that we have a figure out there. This is accord.ca, so thank you to them for always providing up-to-date statistics on their website. What's that chance today, Sam, of the rate hike?
Rate hike chance is sitting at about 200% for today. So
200%. That is quite a chance of rain today. Quite good odds, yeah. So with that, if you were to take a fixed rate today versus a variable rate today, how many rate hikes, single rate hikes, would we need to meet the current fixed rate today?
Yeah, so looking at the standard, variable rate for a 5-year, as well as the standard fixed rate for a 5-year, it looks like it's approximately 7 single rate hikes or quarter point increases for today's variable rate to match today's fixed rate.
So that's quite a number of rate increases still to hit today's fixed rate. So if you were to take today's fixed rate, you would be assuming that there is 7 more rate hikes at the very least before we start exceeding the fixed rate you're locked into over the next 5 years. Always give us a call or your mortgage professional call to talk about the risks of locking in and how that can affect your mortgage. But I know we all have the announcement coming out in just a few minutes here, Sam. Let's go over some items that our viewers may be interested in, and that's how, if there's a change today, how will it affect those and all that. So I guess one of the items here is if rates change, who will be affected? And those with variable rate mortgages, those with home equity lines of credit, those with variable rate vehicle loans, and unsecured lines of credit and variable rate credit cards, those folks are going to be affected. The interest rate on your products will change. And because of that, your lender or lending provider will send you a letter saying that your rate has changed and advise you on how much your minimum payment is going forward. Now, that's assuming rates go up. If rates go down, you'll get the letter saying the opposite, which is the benefit of having a variable rate mortgage because you can take advantage of the increase and the decrease. And if rates change, obviously the payments will go up if your loan isn't locked in on a static payment. However, there are mortgages with static payments where the amortization changes. And Sam, as you know, those are popular mortgages among our clients as well. So right before we get into this rate announcement, we want to just say, like, if you're looking for a mortgage and you're concerned that, you want the variable rate, but you don't want your payments to change, there are some static payment mortgages available where your payment doesn't change. However, it can get you put in a position where the mortgage gets closer and closer to only interest-only payments. So it's always good to talk about that type of mortgage with your mortgage solutions provider. So I don't know if you have the result there, Sam. It's 10 a.m.
I do have.
We have a change today. We need a drum roll. I don't have my drum today, but we're gonna have to start we'll have to reintroduce the drum on our next announcement.
Yeah, so it looks like Bank of Canada, for immediate release, it is increasing its policy rate by 50 basis points. So we have seen a back-to-back double rate hike today.
Back-to-back double rate hike, everybody. You heard it right here from Sam Thompson today. Wow, look at this. I know that we have had a lot of anticipation to today with what's going to happen with the rate announcement and what will happen with today's rate announcement. And it looks like all the articles talking about a locked in rate hike have been correct of this 50 basis points rate hike. What do you think about that, Sam? It was pretty well expected.
That's true. I think now that we've seen some monetary policies since the previous rate hike, I think the growing expectation and economic outlook is a bit more sure, because I do remember the first few rate hikes of the year that we did, and
Yes.
Everybody was for sure calling for at least a single rate hike, and we saw the first few of the year there was still no change until March, when they did increase the rate. So I think now that the Bank of Canada is really up against that inflation and has released its policy, it has actually stayed pretty well on course for some of the policies that we saw ending out 2021, where they were going to start increasing the rate in the spring, and it would enter that tightening, quantitative tightening range of that overnight rate. So I think we're seeing them sort of sticking to the schedule that they had originally forecasted last year.
Mm-hmm. That is a very interesting comment, because a lot of people really don't like to read that specific schedule. They get caught up in the news articles talking about the double, triple rate hikes. And really, at the end of the day, the Bank of Canada is a steady and conservative in the sense that they want to stick to a schedule. They are going to take this ship and run it smoothly. And to see this double rate hike today is tackling inflation at the head for sure. So looking forward to talking about this with you tomorrow, Sam, further on our Canadian Mortgage Weekly episode 81, as we introduce our new topic for the month. And just before we get into that there, Sam, it's always good having you on these rate announcements. When's the next one? I think it's July. When would that be 13th. There? July 13th. So make sure you guys put that into your calendars. Sam and I will be here with our next pre-rate show and rate announcement, as well as the monetary policy report. And I know there's some talk about rate hikes in July. We'll be talking about those on future episodes. But as we get into that, let's just take a moment and introduce Sam Thompson. Sam is a mortgage agent living in Barrie, Ontario, in the industry now for over 2 years, originally from Ottawa, and lives with his wife and pup in Barrie there. So Sam, always great having your expertise here on the show and for you to provide your guidance as well. So great having you.
Yeah, thanks so much for having me on the episode today. It was we didn't get all dressed up for nothing. We saw that change. So yeah, it was good to be here. And again, Joe, thanks for having me on the episode. I mean, you've been in the industry for over 11 years, pushing 11 and a half now, as a mortgage broker, living up in the Orillia area. So again, your insight is very valuable. So thanks for having me on today's episode.
Thanks, Sam, very much for being on Canadian Mortgage Weekly, Canada's weekly video mortgage news podcast. And stay tuned for us next week, where we start episode 81. The month of June, we'll be spotlighting different mortgage products. So next week will be all about mortgage products. So stay tuned. We got some exciting mortgage products that are unlike the standard mortgages you've seen in Canada. So these are products that can help you achieve your goals and dreams with home ownership. Some of the ones that you don't see really at the banks. So Sam and I will cover these in a little bit of a detail so you can get exposed to them. And if this is something that fits what you're looking for, then you can give us a call and schedule an appointment. So Sam, thanks for being on here today. Thanks for watching us today, everyone. Joining us for our Bank of Canada rate announcement and live pre-show on Canadian Mortgage Weekly, Canada's weekly video mortgage news podcast.